So welcome back to the channel, Quanta Apprenticeships. In today's video, I'll be going through what are dividends and how it can impact you when it comes to investing, especially for student investors. I'll talk about what they are, when they get paid, and how they can benefit you. So let's get into it. So have you ever wondered why some companies pay you money for owning a stock? So when you individually buy a stock, sometimes you might get paid a certain, couple of pounds or pence from the company. That is a dividend. It is when a company pays out a share of their profits. This is a key part of investing, especially for income-focused portfolios where you sort of buy a stock, but you also want to receive money on the side. In this video, I'll break down everything that you should know about dividends. So what are dividends? A dividend is a portion of a company's earnings, and that is then paid out to its shareholders. So when you buy a company, if you're going to buy a dividend-focused company, let's say like Pepsi or Coca-Cola, you'll buy the actual stock and then you'll get paid an amount of their earnings of their free cash flow. And this could be maybe about 80 pence per share, or it could be £2.30 per share, or it could be 20 pence per share, however much the share is. It's basically a reward for owning the company's stock, and it's paid out from their profits. It's like extra money aside that instead of reinvesting in the company, they give to you as a reward. It can get paid out regularly, maybe monthly, like reality income, but normally it's paid out quarterly, so every 4 months. But there are also special payments which are larger than usual. So you might be asking, where do dividends come from? Dividends originate from a company's profit and their free cash flow, and this is normally shown in their company's earnings report, which is released quarterly, and it shows what has happened the previous quarter and what they're predicting for the next quarter. A free cash flow is important because it is what a company uses to either buy back into the company, sort of reinvest back in the company. It's for also buying back the shares. So your company, your stock, your shares mean more, and it's not as diluted. But the main thing is this is where they're able to pay out a dividend from the free cash flow. If they have a strong free cash flow that's continuously growing year over year, they're able to pay out a strong dividend that can also grow. And when dividend investing, you want to be investing in growth companies that pay out a strong dividend, but are also projecting good dividend growth. Not all companies are profitable enough in the free cash flow where they can pay out a dividend. So that's why not all companies pay a dividend. They might choose to reinvest that money. It just depends on what the company wants to do. Are dividends paid? The first step is the declaration date. This is when the company announces the dividend payment amount and the date that it's going to get paid. This is the first step. This is where the investor sort of knows how much they expected to receive. The next big date is the ex-dividend date. This is when you have to own the stock before this date. So let's say the ex-dividend date is the 5th of July. If you own the stock from the 4th and before that, you'll be eligible to receive the dividend. If you own it on that day or after, you're not going to receive the dividend for that sector, whether it's that month or that those 3 or 4 months. Then the next bit is a record date. This is where the company sort of figures out who gets the dividend. Then the main bit is the payment date, where you finally get paid your dividend. So the main two dates are the ex-dividend date, which is when you find out when you're going to get paid, but also the last day you have to own stock by, and then the payment date. So why do companies pay a dividend? A dividend is important because it shows financial health. It shows that if a company can pay consistent dividend over the course of 30, 40, 50 years and continuously grow it, it is showing growth. And it is something that you want to be investing in, a company that is putting up good profit and good growth and, a stable company. It is also very attractive for a company to pay it out because it will attract investors. It makes it much more appealing, especially for investors that want to dividend invest. It makes a company much more appealing and will make people want to invest in it, especially if they're growing that dividend. Another big thing is returning capital to shareholders. When people buy a stock, normally if it goes up, if it goes down, they're going to leave it in there and let it grow. But if you pay a dividend, you're going to get paid for that stock. So in a year, you can earn money on top of the actual stock price, which makes it much more appealing. And finally, it's like a gift, it's like a loyalty for holding the stock. If a shareholder gets, bonuses for holding stock, they're gonna want to buy more. It sort of becomes like it's a gift, it's a reward for holding it, so they're gonna want to buy more. It's just that sort of support that they receive from getting paid on top of the actual stock that they own. On the other hand, why do investors like dividends? It's because a dividend provides a regular stream of income. When you buy into a company, you're normally going to let that stock sit there and grow over time. But by receiving a dividend from that company, you're sort of earning money on top of that. You're making money maybe every couple of months or every month as well. It's extra money in a way. The main thing also is the compounding power. Reinvesting dividends is very strong. Let's say you get paid £5 in the first year. If you reinvest that, the next time in a year's time you might get paying £20. You reinvest that. At some point you could be earning enough money just from your dividends to pay off like all your debts. Just because if you keep reinvesting those dividends again, it will compound. And this is the important thing: compounding. And another big thing with dividends is how stable they are. A dividend paying stock is seen much more stable just because they're not as volatile. They're not going to start shooting up or shooting down. They're quite consistent, and this is what you want to see when investing, especially in dividend stocks. Because you're investing in the future, you want stocks that are just going to slowly, continuously rise. You don't want to see stocks jump up or jump down. So overall, dividends offer a powerful way for companies to share their success and for investors to build wealth over time. A dividend is sort of a reward for investing in a company. It's like it will make you want to come back and invest more into the company and get paid a bigger dividend. Remember to always do your own research before putting your capital at risk. So thank you for watching. Remember to like, subscribe and leave a comment. Here at Quantum Apprenticeships, I have a full guide, a full PDF on how to get an apprenticeship with our link below. If you like videos like this, informative videos, just let me know. I can make more like this. Thank you for watching.